70 lakh rupees of salary per annum is the new middle class.
1 out of 3 weddings are funded by our government.
Because nowadays a lot of conflicts are coming in relations because of money.
By your 40s, I think you need to be saving 50%.
50%. What is your view on SIP, especially when the market is down and when people see that SIPs are not really giving them any P&L direct impact immediately? What do you have to say to those people?
I think if you're saving 20% of the income by the time you're 40 and 50, you're going to end up in a retirement crisis.
Which asset class do you totally avoid? Your favorite holiday destination if money and time was never a limitation? Your learnings from Shark Tank.
Seasoned investment professionals, Rahul, have come to me and said, "कैसे करते हो? हमसे नहीं हो पाएगा."
Probably 5 minutes mein you are making a decision without really having a back. The folders that you guys had.
It's just paper to write on. There's nothing.
Hi friends, this podcast will completely change your mind about money, personal finance and investments. The reason is that I'm sitting next to an entrepreneur, a CEO, an investor and now an author. Mrs. Radhika Gupta, MD and CEO of Edelweiss AMC. Thank you so much Radhika ji giving me your time. I really appreciate it. I want to start with congratulations to you. First of all, that Mango Millionaire is now out. It's been around a month now, I hope.
Yes, just about a month.
How's been the response?
It's been actually very informational. I'm of course very grateful for the numbers and the sales and just seeing it do so well. But the reviews, Rahul, have taught me so much about how I want to talk about finance and content in the future. I think the nuances that I'm hearing from the young generation on how financial brands like ours should speak about money and the mistakes we make in speaking about money are very insightful. So for instance, one feedback I've gotten is a lot of financial services is focused on darana. कि आप SIP नहीं शुरू करोगे तो all this bad stuff will happen. You won't do this, so this will. And they're like, don't scare us. Don't tell us the mistakes we make. Don't sell fear. Talk to us like a friend. Money should be approachable. It should be like having chai with someone. I've heard this chai comment at least 20, 30 times.
Right.
And so it's been very informational. It should be deep, it should be fun, and it should be approachable.
Not fear-mongering.
Not fear-mongering, not jargon-full. And when it's approachable, people are picking up things that I didn't even imagine they would pick up. Like, I talked about my mother's very baniya concept of value for money. That we've all learned as kids in India. And people are telling me they're teaching their kids about value for money.
Right.
And so I'm learning these nuances from people. And that's been very heartening.
Brilliant. I think recently I was meeting one of the other guests on my show. The episode should be out very soon. He mentioned something very interesting on the similar lines. He said something on the lines of, if you really want to learn finance and money, make a group of 4 to 5 people, right? That's the best way you can learn about money and investments because you will meet formally, informally, you'll make a group and you will learn from each other so much, in a tight group that you wouldn't learn anywhere. So I think that's what, and you talked about, having these conversations on tea and, in a very informal setting, in a fun way.
In a fun way.
That's what I think I'm hearing a lot now. So
dinner table conversations, snack cup. I think ek zamane mein in India, it didn't happen, right? Money was sort of a hidden thing. So you didn't talk about it. Almost because you didn't talk about it when you were deciding who to give your house to or pass on to, or even a will was a very difficult thing to talk about. Even splitting the assets between the family. If the family was going through financial troubles also, we didn't talk about it at the dining table. Who's earning how much, you didn't talk about between husband and wife. I think the more you make these conversations open, the easier they become.
Absolutely.
Actually. So there's nothing to hide with money.
Absolutely agreed. So on that particular note, I want to talk about a very recent viral post on LinkedIn. Mm-hmm. The author mentions that 70 lakh rupees of salary per annum is the new middle class. and I think he broke it down to 3 main parameters. One is the rising taxes in India. Second is the rising cost of living in India. And number 3 is the social media influence. Meaning you see somebody buying iPhone and then of course you get dragged into that buying behavior very easily and quickly, right? I want to ask you, is it becoming the new middle class trap that in India no salary is enough, or is it blown out of the proportion?
Okay, so firstly we have this. I was talking to a colleague. we all, no matter how much money we make in this country, like to call ourselves middle class.
Right.
It is almost cool to be once upon a time middle class.
Right.
The reality is none of us are middle class. Okay, the technical definition of middle class cannot be 70 lakhs of income.
Absolutely.
70 lakhs of income is upper class.
Right.
Middle class, I think in India is either 6 to 8 lakhs of income or 5 to 6 lakhs of income. That is middle class.
Right.
So stop calling yourselves middle class.
Absolutely.
We are not. By the way, even I call myself middle class sometimes and you will laugh at me, but we are not middle class. All of us come from middle class roots. We have middle class psychosis. We have middle class thinking. We have grandparents who are middle class or lower middle class. And, generally there are very good things about middle class upbringing. So we hold that word middle class very dear to us. Reality is, and I am not saying, Rahul, that 70 lakhs of income is less or more. But reality is that no amount of income is enough and no amount of income is too little. And there is actually no average in India. I mean, we have 140 crore people. Of them, I think 10 crore people have a per capita income of more than $12,000-14,000. And then you have about 110 crore people who have a per capita income of $2,000. So you can't average
Absolutely.
this country at all. I do think that the conflict between saving and spending was always there. I remember my father in the 70s used to have a salary of 400 rupees a month because
Right.
he joined government. And by the end of the month, he used to blow it up on records. My mother said, now people will not know what records are, but those purane zamane ke hote the records. And he would go to the bank and ask for an overdraft. He was a government employee, so SBI was very kind to him. The problem, to your point today, is it's exaggerated because of the influence of social media. I spoke to a young Gen Z kid and he said, I was asking him, why do you have this debate about 60, 70 hours a week? And he's like, we can't afford to work more than 45 or 50 hours a week because we have so much else to do. He's like, I said, what do you have to do? You're not married. You don't have kids. Like, look at me. He's like, but we have to go to the gym. We have to maintain fitness because we have to compete on social media and we have to have vacations. So I think it's all out there in public domain.
Right.
The reality is now comparison is a lot more public than it used to be.
Right. And I think that's what is driving some of the fear between the young people.
Yeah.
There is a huge competition. If you're earning 20 lakhs per annum, you might get depressed by going to social media and saying that so-and-so is earning 30, 40, 50. There's no limit.
And it's driving people to do crazy things. So I heard one story of an uncle who really should not be doing this, but he lost 15 lakhs in a month on F&O trading. And then I heard a story about a kid who was trying to, about mid-30s. Again, he was trying to buy a car, a luxury car that another friend had posted on social media. And he lost 90 lakhs in F&O trading.
Oh my God.
These are large amounts of money.
And these are real stories.
And these are real stories. I mean, these are stories in my immediate circle. So,
okay, let's swiftly move to EMIs. That's another trend that I really want to speak to you about. I think you might have covered that in your book as well. So as per the data that I found on internet, right, and I'll put the source for my audience, up to 2020, COVID time period, about 46% of income used to go to EMIs. This is at an aggregate level.
okay.
By 2024, this percentage has gone up to 61%. So meaning 61% of the income people are spending on EMIs. Of course, this is going up. What's your view? Is it too high, or do you think it's okay?
So firstly, the data doesn't surprise me. And it's not black and white. See, India used to be a country where household leverage was very, very low.
Right.
जितना लोगों को credit लेना चाहिए था, वो शायद लेते भी नहीं थे. The worry is that maybe in the last few years, have we strung to the other extreme? Now, I talked about this in the book and you asked me, is it good or is it bad? The fact is, credit access has gone up. I mean, I give the simple example that today, if you go to an airport and you go to a lounge which has credit card access, the lounge has it has no seats.
Yeah.
If people are sick of them, I mean, I stopped going to the lounges because everybody has 2-3 credit cards. You will see them at the entry saying, try this card, try this card. People have so many cards. So credit access availability. I read a stat that 7 out of 10 iPhones are funded via a loan.
Yeah.
And 1 out of 3 weddings are funded via a loan.
This I did not know. Okay.
25% of white goods are funded via loan. Now, I think there is, and as I said, we talk about on Mango Millionaire, there is a distinction between good debt and bad debt. Because you can swing to extremes. I don't believe that one should take no debt in life. For instance, good debt is debt that builds an asset. It's like the government does borrowing to do capex. You're building an asset, right? If you're building an asset by I studied on an education loan, I don't think that's bad. You're building your own, skills. Building a home, I think home loan funding today in India is 7.5% to 8.5%. That is fairly effective source of funding to buy a home. ये मुझे बुरा debt नहीं लगता. You're buying a laptop for your work. This is about the limit. And there was a old middle class belief that all debt is bad debt. So I don't subscribe to that school of thought. I think debt is a tool, like all other financial products. If it's used to build a productive asset in the right quantity, where the EMI is not a source of stress.
Right.
And we've given some numbers on how to manage your EMI, but the EMI can't be a source of stress. It's okay. The problem I worry about is when debt is used to fulfill things that are lifestyle expenses that are not needs. They are wants, and they're fundamentally not affordable.
Right.
So if you're using debt to buy diamonds, or if you're using debt to go to a Coldplay concert, then मैं उससे सहमत नहीं.
Right.
So I think there is a distinction between need and wants, between capital expenditure and revenue expenditure.
Right.
And I think the Coldplay concert and the diamonds are revenue expenditure, and I think the house is capital expenditure. Right. So it's a bit of a blend. On aggregate, I would say it's more a worrying sign than one talks about. I'm glad the RBI is doing something about it. I see podcasts or Zoom calls where I do with investors, where kids will write in the private message comment box, "Ma'am, I'm in a debt trap. What do I do?"
Right.
To a stranger.
That's not a good situation to be in. Absolutely.
That's not a good situation.
You touched upon needs and wants.
Yeah.
I want to also get your perspective on this famous rule that started from Western world, which I do not endorse it at all, which is 50-30-20. That 50% of your income you should spend on your needs, right? 30% on wants, and 20% you should save and invest.
Ooh.
Can you contextualize that, or what's your view from an Indian perspective?
In aggregate, in India, if you are saving 20% of your income, and again I have a savings framework, but it's very different, I think you will be in a problem.
Right.
The phrase, so I'll give you a counter framework, and then I'll tell you why I question this one. We have said, because everyone struggles with kitna save karna chahiye, right? So we have said, do this by age. If you're in your 20s, you can get away with saving 10%, because honestly, all you need to do is build a habit, right? In 20s, you're actually so worried about YOLO and living only once and zindagi na milegi dobara that 10% is okay. I believe even by the time you enter your 30s, if you're not saving 30% of your income, because EMIs, home, family, parents, dependency, all of this is real. By your 40s, I think you need to be saving 50% of your income. So, candidly, we disagree with the framework. And I think the difference is, and I've spent time in the US market, the US has a very strong social security system. It has a very strong public infrastructure where you can, if you live in the right residential society, send your child to a public school.
Absolutely.
You can get public health. Most people will not go to a public school. Most people will not use public health. And we don't have a social security system if you don't work for Government of India. So, my father who worked for Government of India could probably get away with saving 20% of his income, even though he saved much more, because he has pension, he had PF, and he had his health taken care of. I think if you're saving 20% of the income by the time you're 40 and 50, you're going to end up in a retirement crisis.
Right. Okay. I think that's quite meaningful. I also wanted to check with you personally how you manage and control your expenses. So both you and your husband, you are earning, you're spending.
Yeah.
So when it comes to the process of spending money, right? How do you do it? Do you have a joint account, or is it that one of you spend money, one of other one, save and invest? How does that go? Because I think it's important for couples to figure out a very good way or a process that is slightly more automated, and it's agreed upon, because nowadays a lot of conflicts are coming, in relations because of money, and we hear that. So
I think it's a great question. People don't talk about it enough, both the automation and the conversation. And I believe it's possible to be very independent, because all the girls want to be independent minded. My brother was telling me nobody has joint bank accounts. He's a few years younger than me, so I don't know if that's true. It's possible to be very collaborative, very transparent as a couple, yet be very independent in the management of finances. And my husband and I have studied together. We're in the same industry, so I'll tell you what works for us. It may not necessarily work for other people, because people have different income levels. In some case, one person is a homemaker, all of that. But I'll tell you what works for us. So we have individual accounts, but we also have a joint account. And that joint account is used for home expenses. It could be the home EMI, it could be our son's school fee, it could be all the joint expenses. And we both put money into that joint account. So it actually works quite nicely. No, one doesn't do accounting for every last onion and potato that one buys, but that's the principle. Both of us know, even though we have these separate investments in our name, what the other person has in terms of corpus. He knows what I have. I know what he has. We have individual investment policy statements, which I highly recommend. Choda the document that we've written about what each of us want for our money. How conservative are we? How aggressive are we? What kind of AMCs we like to invest in? What funds we like to invest in? What we don't like to do? And this really helps us when things are not going well. Or when there's that feeling of FOMO that, small cap is doing well, why did, no. But in my document, I said I'm not comfortable. So it's our kind of anchor point that we've made. We sit and review the finances quarterly, but we don't make changes. Every once a year, we sit down as a family. We look at the income for the coming year, because our income is reset every year, like many professionals. We look at what expenses we incurred last year. We actually systematically say, घर पे इतना खर्च हुआ, what expenses are we going to incur the next year? We figure out what our post-tax income is after these basic expenses, and then that is savings. And we figure out, what are the 1-2 discretionary expenses that we want to do? Because we want to enjoy life, of course, right? So are we going to take a new club membership this year? Are we going to buy a new luxury car this year? Whatever it is. Are we going to do some holiday or something big, or, one of those two things? We think that everything else goes into monthly SIPs.
Brilliant. So you talked about the investment policy, if you like.
Yeah.
And you have your own, and he has his own.
But we both know each other's.
Yeah. But from an investments perspective, do you differ a lot? Like, his thinking might be very different from yours in terms of long-term goals, the vehicles that you choose, or is it you're pretty much aligned with each other? How different are you?
Different because of risk appetite. But not different in the things that matter to us. For instance, and I guess it comes from working in the same industry, we value the same kind of things in an asset manager. Of course, I have a lot more Edelweiss than he does, because he's not a CEO of a mutual fund company, so he doesn't have the obligation to have as much Edelweiss. I, of course, have 60-70% in Edelweiss mutual fund. But we both like more boutique asset managers when we are not working with Edelweiss AMC. We value transparency and trust a lot. We are very focused on the kind of risk fund stake. So that, I think these principles, we are very liquidity conscious, both of us. So we don't like locking up our money unless someone is giving up something really serious for it. So those principles are common. For instance, I do a lot more unlisted than my husband does, because of Shark Tank, because of the startup scene, etc. So I do a little bit more of that. So I would say the grounding is very similar, but the execution is different. I think my risk appetite is a tad higher. Right.
And you talked about the investment vehicles to be, one of them is mutual funds, right? We've been hearing in social media lately that SIPs, especially when the market is down or sideways for almost like 8 to 9 months now, SIPs may not be able to create wealth. That new noise has started to come into market. What is your view on SIPs? When especially when the market is down, and when people see that SIPs are not really giving them any P&L direct impact immediately, what do you have to say to those people?
SIPs are not supposed to give you P&L impact immediately. They are not instant gratification tools. SIPs are a way to buy something on a regular basis, and if something has gotten cheaper because the market is down, actually SIPs work. If you did SIPs in a market that is only rising, SIPs are stupid, right?
Right.
Because SIPs, and the other thing SIPs allow you to do, which is not mathematical, is they allow you to automate the process. If every month you're doing this decision of should I buy now or should I buy later, half the times you will not buy and you'll sit out of the market.
Yeah.
Now, I'll give a statistic for these people. The problem is we look at everything on a 1 year basis. Our oldest fund, Edelweiss Mid Cap Fund, the minimum, worst case, 10-year SIP return is 9%.
Right.
Worst, like when the world ended, it started at 2007 peak, 2008 crisis happened. But अगर किसी ने 10 years की SIP की है, the worst investor has earned 9%.
Right.
That's awesome. The best investors, of course, earned, some 18, 19%. The aggregate, 20 something percent. The aggregate investor has done very well. So if the worst case outcome over 10 years is 9%, why do you worry?
Not want to do it. Yeah, absolutely. And I think this question about mutual funds, I've asked a few veterans in the market, how do we go about selecting a mutual fund, right? I haven't got a concrete answer yet, unfortunately, right? Because of whatever reasons, maybe people are not allowed to say things. But I want to ask you, there are a lot of mutual funds coming out in the market. Like every single day there is an NFO, right? How do you, it's becoming like a stock picking now.
Okay.
What are the parameters you would look at if you were to look at mutual funds for long term without really, disturbing your inflows into the market?
No, I give you I want to be very transparent about. There's so many. It's so funny that mutual fund has this term called NFO, no? And that's a new fund offer. Yesterday I was roaming in Noida and they said there was a billboard that said NFO alert. And I said, which competitions fund is coming out?
Out of curiosity.
Yeah. NFO stood for Noida's finest opportunity for real estate. So I loved it. I love NCR. But look, the parameters are very simple. First, I cut when I choose mutual funds that are Edelweiss or non-Edelweiss, I cut the decision making. Most categories are not needed. So I go back to the core categories I want to invest in, and those are only 4 or 5. For instance, I like flexi cap as a category. I like large and mid cap as a category. I like multi cap. I like mid cap. I like small cap. 5 categories are many. Then there are 1 or 2 debt categories, 1 or 2 international fund categories that I choose. Now, within these categories, I search for excellence. How do I define excellence? One, I have to trust the asset management company. Now, in my case, it doesn't matter whether it's top performing, big, large. I have to feel a sense of trust, and that I judge by people's actions. And I, of course, know asset management companies. Then I look at the portfolio.
Right.
Most investors don't. I look at the fact sheet and I see what is the portfolio of the scheme. I get a very good sense of a lot of things from the portfolio. I'll give you a couple of examples. Are they holding 50 to 70 stocks? Are they holding 20 to 30 stocks?
Okay.
Concentrated or diversified. In a mid-cap fund, am I seeing a lot of large cap names? Because then I'm like, okay, this is khatka hai. Do I see more value-oriented companies? Do I see more growth-oriented? I read all the literature.
Right.
I align what they claim to be doing with what I see in the document.
Sure.
That for me establishes trust.
Okay.
And on performance, I look at one metric, only one metric that everybody can look at. It is the 5-year rolling return of the mutual fund. Bas. Main aur kuch nahi dekhna. Basically, in simple terms, in any 5-year period, what is the customer experience of this scheme? Good, bad, ugly. Minimum, maximum, average. That's all I care about.
Right. No, this is very simple actually, quite simplistic. 5-year rolling return gives us the consistency.
And look at the portfolio and 5-year rolling return. Bas. Okay. All answers will be found in these 2 documents.
Right.
I have almost never held one of those hotly talked about AMCs. Because I invest in other AMCs. I've always held slightly underdog ones and I felt very comfortable.
Comfortable there. Okay.
And I don't rebalance anything before 3 years, ever.
So, before 3 years, you don't even look at it?
Yeah, usually after 5 years. But I look at it, but I never touch it. Okay. I give them that much time.
Right.
Otherwise, I think people get into an exercise of rebalance and paying a lot of tax.
Right. Absolutely agree. You didn't touch upon smart beta funds because,
I can. I like them. I have some of them.
Right.
I think they are. So there are two categories I like that are slightly more nuanced. One is smart beta, and I think they are a very good way to give you rule-based exposure to things you can't find on the regular actively managed platform. For instance, in the mid-cap category, we run a great fund, others run funds, but there is a style fund managers use. It typically tends to be very quality conscious, growth plus quality, while making sure you're fair to minority shareholders. This is typically the style that we have. But there are momentum oriented mid cap funds, which are very aggressive, very agile, and it's typically a style the active guys don't use. So I supplement this with a momentum oriented one.
Right.
So I think smart beta allows you to do very targeted investment management that complements your existing active management. And I'm very happy you didn't ask me the question of active versus passive. There's actually no versus. It's active and passive and
together.
smart beta. The other category I fundamentally like a lot is hybrid oriented funds.
Right.
I think they cater to a lot of different needs and risk appetite. So funds that blend equity, debt and gold in multi-asset format, or equity savings funds that only have 1/3 equity but the rest fixed income. I think for different use cases, they can be very powerful.
Right.
So like my mother-in-law is a single retired woman, very conservative. She keeps largely money in an equity savings fund.
Right.
And she does a quarterly withdrawal from it.
Right. That's
So I
that's
think
good.
those tools, we often see mutual funds as stocks only. We don't realize their potential to be a food court of opportunities, and
Right.
you pick what works for your diet.
Right. And I think I know you gave us the categories that you like
Yeah.
personally, but how many mutual funds? That's another question that
Oh,
people are
God.
trying to find out. There are people I know they've got 20 mutual funds in their
20
portfolio,
is very nice.
and there are people who've got 5. So where is the balance for you personally?
About 8 to 12 at any
8 to
given
12.
point in time. So as I said, 4, maybe 3, 4 equity categories, 2 funds in each category from different AMCs.
Right.
And when I'm trying to look, like say again, if I take a mid-cap category, if I picked a fund with our kind of style, the second fund will be something with a very different style. So I
Right.
know the AMC has a different style. I don't want to overlap too much across AMCs. I don't want to overlap across styles. People have this very strange thing that diversification is buying lots of stuff. It's buying a little bit of different kinds of things. It's
Right.
like a diet. You don't just
Yeah.
eat protein in a diet. You buy
course.
different things. So I think 8 to 12 works for most people. 3 equity categories, maybe 1 or 2 international categories, 1 or 2 debt categories. Okay.
Right.
I actually believe it's possible to make a portfolio even in 4-5 categories if you use hybrid funds smartly.
Yeah.
In 4-5 funds. By the way, I've seen people with 100, 200 schemes.
100 schemes.
I've seen 100.
How do you even
I've
look-
seen 200. I've seen 30,000 rupee SIPs with 40 schemes. I don't know what they're doing. I don't know what the CA is doing.
Since we are on the topic of mutual funds, I also wanted to get your perspective on the new mutual fund class. Not a mutual fund class, but SIF.
Yeah.
So it's a fairly new product.
Yeah.
I don't know, many people may not even understand it.
Yeah.
I know few AMCs have launched it. Yours have they launched it?
I mean, we're all waiting for approvals, but I guess in the next couple
Next
of months,
few-
you will see quite a few launches. Look, I like the class.
Right.
SIF stands for Specialized Investment Funds, folks. And I think it fulfills a gap in India. You had mutual funds, which we've spoken about a lot. Dal chawal, basic, with investment restrictions, tightly bounded, but for the Aam Janta. Then you have categories like AIF and PMS,
Right.
where you have good quality managers, more investment flexibility, but the challenges of 50 lakh, of 1 crore, taxation is not always the cleanest. Like in a PMS, you're paying a lot of short-term capital gains tax. AIF, if you do derivatives, you're paying 40% tax. Entry marta hai SIF, which I think gives you the flexibility of PMS and AIF, but the taxation and operating structure of mutual fund and a 10 lakh ticket
Right.
size. And what's good here is I've met a lot of consumers who, once they acquire wealth, want to stretch themselves to buy a PMS or AIF to feel cool, which I think is totally wrong. And I think SIF will let them experiment with new ideas in a smaller, palatable amount.
Right.
So I'm very excited about some of the SIFs coming out.
And do you think it's a lot of mutual fund inflows would move to SIF over a period of time?
No.
Will it cannibalize or will both coexist because there's a market for both of them?
I don't think this eats the space of mutual funds. If you are doing what a mutual fund is doing on a SIF, you should not be running a SIF. If anything, I think it should take flows from the PMS and AIF category.
Of course.
Because they and I've come from that world, they have their challenges. So I think the equity AIF category of long short funds and all, some of the PMSs, I think that action might move here. I don't think this is going to change mutual fund flows. I also personally, as someone who runs a mutual fund company, still think if I look at my 2030 business 5 years later, 80-90% of what I do will be mutual funds. SIF will be 10%.
Right. Okay.
Could be a good, valuable 10%.
Yeah. Yeah. Okay. Since we've talked about investments, I want to ask you personally, which asset class do you totally avoid? I know you talked about illiquid assets.
Real estate outside of a primary home. That's the right answer.
Right.
I keep getting opportunities, I keep getting offers, but I've never understood it. And I know I'm sitting in NCR where this is a very popular asset class. But primary home, of course, I have.
Of course.
And I've spent too much money on that. That's a different conversation. But outside of that, the illiquidity and lack of transparency in that asset class as well, and the ability not to do partial withdrawals, it just spooks me. Plus the fact that I've seen so many stories in the family of people having properties, tenant issues, maintenance issues. I just don't. And I do unlisted equities.
Sure.
But I enjoy that. With real estate, I don't even enjoy it.
Right.
So it neither gives me joy nor gives me liquidity. And I'm not even sure the returns match equity. So I don't see anything good. I'm going to get killed by some builder. But yeah.
That's okay. You'll take it on the chin.
Yeah.
What about cryptos?
Avoid. Only because I don't understand it,
Right.
One.
Right.
Secondly, it's not fairly regulated in India. It's not. And until something is regulated, I will not touch it.
Right. Okay. No, brilliant. Thank you for that. So I think you've been very clear in your mind in terms of where do you want to put your money, where do you want to avoid your money. But I'm still searching for something that you would have made a mistake in your life financially. And I want to ask you, which one is the top one that stands out, and what did you learn from it that we could benefit right away?
So in my early days, I did a lot, and I'm a very impatient person, Rahul. I rushed through a lot of investing decisions.
Right.
And I would do what a lot of people do, which is invest karna hai, what's the best mutual fund to invest in? That's usually the first question. Like, I've not been investing, I've kept my money in a bank account. Radhika, I want to invest, what's the best fund? Without thinking, planning, budgeting, thinking, this is my risk appetite, this is what I need to do, these are my goals, this is my game plan, now let's invest. And I did that in my early investment career where I would just get bonuses, dump them into equities without thinking, wait, don't you need some debt here? Don't you need some contingency funds? What if something goes wrong? So I've told this story, but I'm happy to tell it again. 2007 end, I started investing. I made a couple of years of bonuses on Wall Street. 100% money into equity. 100%. And then 2008 happened. No debt. And 2009, we decided to come back to start a business. And now PMS business in India at that point, it took 2 crores of capital. So I had to put 70 lakhs.
Right.
Did you get the 70 lakhs? You redeemed equity at the bottom of the cycle.
Absolutely.
It's
horrific.
Horrible. I still have nightmares about it. So that is one. If people have things like ESOP and that wealth, one thing is to not let anything become a very dominant part of your portfolio.
Right.
So you need to have rules. कि if I have this, 20% से ज़्यादा नहीं होगा, 10% से ज़्यादा नहीं होगा. And I think I've made mistakes with letting things get too large in my portfolio sometimes and then cutting the size. So too much of your net worth or liquidity can't be in one place. I think that is extremely important. I haven't done direct stock investing. I made some unlisted mistakes. I fundamentally think for those who are doing any kind of equity or listed or unlisted investing, conviction in the business is far more important than price. Sometimes in India, you get value bargains.
Right.
Whether it's value company, बहुत सस्ता लग रहा है, बहुत अच्छी deal है. And in the magic of the deal and the price and the bargain, you don't forget, you sometimes forget, is there inherent merit
Right.
in this? Do I believe in that business model? And I think don't make that mistake. So now when an entrepreneur comes and pitches me, I don't even ask, what's the valuation? What are you offering? I don't even ask that question.
Right.
I spend time understanding the business. I'm like, show me your products. Let me spend time with them. Let me understand the business. Let me hang out on your website. But I am not having that valuation conversation. I'm ready to pay you a little more expensive if I have conviction on the model.
Right. I think this goes without saying that never pick a kachra stock. I mean, I say that never
It's
pick a
kachra
kachra
stock.
stock because it's dirt cheap, because it's penny worth today. It doesn't mean it's going to be in dollars, right? Because it's kachra at the end of the day.
And
So,
the temptation's so high because even kachra can be packaged really well.
well, see, the hard part is to identify which is kachra and
Kachra.
which is not.
Yeah, exactly.
I think that's where we all, I mean, I've been investing in stocks for a long time and I pick stocks. And I know you look at the stock, right? You look at the P&L, you look at the balance sheet. It's extremely hard to find out, where the information is hidden. That tells you that there's a red alert here or there is absolutely a green alert here. Carry on.
Correct.
So I think identifying, it's very easy to say it's a kachra stock, but really, narrowing it down is the difficult part.
And I think that's why you have to really, we used to run a private equity fund also, and I used to sit on the IC, but deep diving really into the heart of the business. And sometimes it's hard in India because you have conglomerates and subsidiaries and all of that. But deep diving into the heart of the business, consumers, product proposition, that tells you, is there something fundamentally inside this?
Yeah. So I think before I go to the rapid fire, I want to ask you your learnings from Shark Tank. Being on Shark Tank, what did you really learn? I know that you might have invested. That's of course the side benefits of it. But in terms of learning, what was it?
Oh God, I mean, it's a long list. But one, I think instinct, right? Because we're very data driven as investment professionals. And in Shark Tank, contrary to the public perception that you have lots of data and information, you know nothing about these companies and you're making a decision in 45 minutes, right?
Do you not get the
We get
paperwork?
nothing. We get nothing. You walk into a room like this and then maybe you'll see a display of some food or packaging and the show rolls in a minute. You get nothing. Seasoned investment professionals, Rahul, have come to me and said, "Kaise karte ho? Humse nahi ho payega." Because
45 minutes mein you are making a decision without really having a back. I thought the folders that you guys had.
it's just paper to write on. There's nothing.
Okay, fine.
It's
Okay.
nothing. There's no analysis. You're doing your maths on the spot. And it's a high stakes environment, right? Because there's cameras, there's 5 sharks raising hands and vying for attention to speak. You want to look good. There's the on top. There's all that drama off camera.
Yeah, of course.
So I think your instinct is very, very important. So I become a lot more instinctive. And incidentally, every time I would make a decision, half the times my husband would be like, "What have you done?" But all my companies, and I've never said this on camera, I've actually done extraordinarily well.
Right.
Now, I've done less investments, but they've done well because I think the instinct starts to kick in.
Right.
The consumer instinct, the business instinct, the leadership instinct. So
And
I
the
think
confidence of the promoter when they're coming in presenting.
just the judgment of, do they have it? Are they humble? Do they know their data?
Right.
Can they weed through this? I think
Right.
that instinct, all of that. So I've learned as an investor to be a lot more instinctive and also to play in spaces I understand.
Right.
So, deep tech is not my forte, but a consumer business that caters to women or something in financial services, I understand.
You understand
that.
it.
So it's also to play the game you know how to play. And I think that's true in life. I think there's a tremendous amount of learning from watching the journeys of these entrepreneurs and the fact that there are so many new categories of businesses that are going to be created in India, particularly in brands in D2C. So I do believe there's going to be an explosion of categories. Categories I never thought.
Right.
It's almost made me younger. Like pet care as a category. I don't have pets, so I don't understand that space. But a lot of these categories, fitness, I'm just learning about categories. And then, of course, I think there is something you just learn from being on a set with that many smart other entrepreneurs who are sharks, young entrepreneurs in tier 3 and tier 4 India doing stuff. So there's a lot of stuff you learn. But I think instinct, the kind of categories that are getting created in India, and just the osmosis that comes from people around you is very, very powerful. And by the way, the last thing I learned, I have so much respect for the television industry. I can't tell you. I mean,
Right.
in our world, it's very easy to call in sick and say, "Tabiyat kharab hai, nahi aata." You can't do that in television. There are 300 people on a set waiting for you.
Right.
They don't get paid a lot of money. So I think it's
The
and if-
discipline.
the discipline, the commitment, the detailing. And anytime I have gotten tired on that set, and people don't know it's a 15-hour shoot, everyone would say, well, the next set is KBC, and there's a guy who does this from 6 in the morning to 11 at night. He's 80 years old. And we all know.
You're not counting the 40 hours a week now.
Yeah.
You're talking about 60 to 80 hours a week.
Yeah. And actually, you do Shark Tank after your primary business, right? It's Friday, Saturday, Sunday.
Right.
So you're working really long hours.
Right. No, that's really great. And I'm sure you would have also got some insights about the unlisted space in terms of...
I never touched unlisted,
Yeah.
and now I quite enjoy it. I mean, I'm meeting an entrepreneur. I just met one today. I'm going to meet one more tomorrow. So I'm amazed.
Absolutely fantastic. Let's move to the rapid fire round now.
Okay.
There may be some controversial questions. I try to avoid them typically, but I'll try to keep it very positive.
Enjoy the controversial
No,
questions.
absolutely not.
Okay.
Absolutely not. So let's start with the first one. Your favorite holiday destination if money and time was never a limitation?
I like Italy. I've grown up there. I think it's a very complete country in terms of the package that it offers. It's probably controversial, but I do love the Maldives. And I love so many places in India. I just think India is an underrated tourism destination. Like Meghalaya, for instance, is fantastic. I love Japan. I just went to Japan. I think I'm going to be going many times more. So many places actually.
Yeah, I mean, it's really great to get so many names out that we're looking forward. If you were to go to dinner with any famous personality, who would that be? Other than your husband, of course.
Can I pick two?
Yeah, go for it.
Nandan Nilekani and Shah Rukh Khan.
I do want to ask you then,
Yeah.
why these two personalities? One is from Bollywood, of course. One is a well-known businessman. So just give us a flavor on that.
So Nandan is someone whose career, if you had asked me, I admire immensely because his ability to change himself, to add value and create impact in both the private and public sector is amazing.
Right.
I've never met him, but I think I would just learn so much.
Right.
And I am like a diehard Shah Rukh Khan fan. And more than his movies, I think his interviews and his wit, he would just make for a really fun dinner. And I think that combo would be very smart. Would be a lot of fun.
Absolutely.
I think it's like...
I think very, very good choices indeed. So thanks for sharing that. Let me move to next one, which is the best finance book that you would like to read again and again and again.
Oh, best one. So there's a book called Nudge that's very, very good. I think it's very... Unlike a lot of finance books that give you gyan, it gives you very implementable small things that you can do to do better decision making.
Right.
So I think that one's very good.
Okay. Linked topic now. Who, in your view, is the best investor in this entire world that you admire or look up to, maybe?
There's not honestly a single name. There's, and I think the great thing is there's something. The best investors are the ones who stick to their guns. So, people quote Buffett and people quote Junjunwala, and they're all great guys. But I think good investors are the ones who actually stick to their guns. For instance, Cliff Asness ran AQR Capital. He still runs AQR Capital, the firm I started my investment career with. They do a lot of momentum, right? It's not this buy right, sit tight kind of stuff. But he has tremendous conviction about it.
Right.
So I think anyone who has conviction and sticks through the conviction is a good investor.
Your most favorite Shark Tank judge that you enjoyed, sitting with the...
So I haven't done enough seasons, but since you asked me a question, Piyush Bansal.
Any specific reasons?
I like the company he's built and I like the conduct he has on camera.
Both are important, actually. Very good. Now I'm going to give you two choices. Make your life a bit more easier.
Okay.
You being an investor for a long time now and being a woman, would you choose diamond jewelry or gold jewelry? And this is not about investments. You're not putting this money into investments. Diamond jewelry, gold jewelry.
It's not investing?
No.
Then diamonds.
100%.
Because, then diamonds. Of course, they're set in gold, so actually it doesn't matter, but I like diamonds more. But they're not investments.
Right. Given the tax treatment of debt mutual funds now, they are at par with FDs.
Yeah.
What makes more sense now, FDs or debt mutual funds?
Still debt mutual funds because the liquidity profile is better. Unless you are a senior citizen or you're not in, you have those special sort of categories
of rates.
Yeah.
Okay, and taxes.
For normal people.
Who is more frugal in your family, you or your husband?
Me, by far.
Really?
I am a proper banani. Proper.
Spending less, earning more, saving more, investing more, thinking about future.
Proper banani.
Okay, my last one for you. Are you a born leader or you think you've worked hard to become a leader where you are today?
Definitely the second one. I started my journey hating people and thinking I don't want to report to anyone and no one should report to me.
Right.
This is all learned.
Brilliant. So this is a rapid fire. I just want to ask you, take a minute and ask you any advice for people like me who are creating content, content on social media, conducting lots of podcasts, lots of content every single day. Anything that you would like to say?
So I get a lot of questions about social media, and I want to say I think social media is great. I think the power that people like you have to reach consumers is great. My only request is, especially for those creating financial content, use this power responsibly. Create reasonable, non-sensational content, because in this country, whether it's this kind of content or your kind of content, good content has a lot of power.
Right.
Doing education is a service. So look at it with that.
Brilliant. With that positive note, I think I've thoroughly enjoyed this. This has gone very, very naturally. Learned a lot of insights about you, your investment style, Radhika ji. And all I want to say is that good luck to the book. You don't need the good luck, but it's absolutely doing fantastic, and keep doing what you're doing.
Thank you. I've
thoroughly
had fun
enjoyed
too.
it.
Thank you.
Thank you so much.